Hey, good afternoon, everyone. Thanks for giving me your time. Sorry, I'm a few minutes late here. Um, but this is Mark from Right Line Trading, and I'm not going to spend any time going over slides. I'm going to show you the system directly off the charts. And it really is an amazing scalping system of the NASDAQ. It leverages all the volatility that is present on the NQ, which is enormous. And if you watch the signals closely, you can turn the NQ really into sort of a cash cow. Now, let me just start off with this disclaimer that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures or forex or stock markets, nor for any profits or losses may be incurred. Participation in trading in the forex, futures, and stock markets involves substantial risk, and it should be understood that a person can lose substantial amounts of money. Therefore, the participation in these markets is not appropriate for everyone. Careful consideration of your financial position should be made prior to trading, and we are not registered financial advisors, and we're not licensed commodity trading advisors. With that said, I'm going to move the slides off. And I'm going to go directly to the slides. Now, I'm going to try to teach you the system directly off of the slide of the chart without looking at any slides. And it really isn't that tough. And well, it may be a little bit harder than I thought. Let me just go through a few slides very, very quickly for you, because I think it's going to give you a better feel for the system. But I want to do them really quickly because I really want to show you how to trade. Now, the first thing I want to talk about, and I'm gonna skip a lot of slides, is about how to trade using an oscillator and why it's so important and how oftentimes it's so misused. And if you use it appropriately and correctly, it can really help the precision of your trading. The question is, you have to use the right kind of oscillator, and you have to look for the right things. Now, just to quickly look at the formula for an oscillator, this is a stochastic oscillator. And all of the oscillators, whether they're stochastic relative strength, Williams percent K, ADR, ADX, use essentially the same formula. C is the most recent closing price. This is a 14-period moving average of the previous session lows or candle lows. Here's the 14-period moving average of the previous session or candle highs. As the close of the candle approaches the high of the candle on a long move, you have momentum to the upside. And when the close of a move approaches the low of a move, or this 14-period average low on a short trade, you also have momentum moving or increasing, but just increasing to the downside. Now, to understand momentum, what you really have to understand is what it's looking at and what momentum is. Momentum is a second order derivation. And what that means is it's measuring not the speed with which price moves to its high, but how fast it accelerates up to its high. Momentum is change in price. It's change in speed, not speed. So if this stock, and this is actually a forex pair, the dollar yen, when if price moved up to this point at a constant pace, there would be no increase in momentum, and the oscillator would stay flat. But if price accelerates up to this point, then momentum is going to rise to the upside. Now, you always want to see price accelerate up or price accelerate down. The faster it accelerates down or the faster it accelerates up, the more momentum it accumulates. And it's just like a race car going around a track that's going around the track at 100 miles an hour constantly. Momentum is flat. It's not changing, because momentum is looking at the rate of change in speed. And if the change in speed is constant, there's no change in momentum. And what an oscillator does is measure momentum. So when price accelerated up to here, it accelerated up and created this much momentum. Momentum moved into overbought. It then retraced and accelerated up to the same price again. Only this time, it only did it with this much momentum. So its acceleration, it did accelerate up, but it didn't accelerate up with quite the same change in velocity in price as it did before. Now, what the postulate is if a price makes an equal high, but accelerates up to this price really strongly the first time, and then accelerates up to this price a lot more weakly. I mean, it's the change in price as it moves up just barely increases in speed, and you get this lower assessment of momentum. It's going to foreshadow a collapse in price. And you can see it tried to make a third high, didn't get up there, but again, there was an equivalent amount of momentum. So this was more of a lethargic move to a lower price, and then price collapsed. Now, that's the way that an oscillator was traded for many, many, many years. Looking for divergent signals and looking to see a decrease in momentum on equal highs or equal momentum on higher highs, which I'll show you here. Here's where price accelerates up to this price on this much momentum, then retraces and accelerates up to this high on the same amount of momentum. Same thing. It's going to foreshadow a collapse in price. If price makes a higher high, it should accelerate up to that price with more vigor, more energy, and that race car should just accelerate up to that high. Here it doesn't do it, and it's going to foreshadow a collapse in price. Now, I don't know how many of you are still trying to trade divergent signals, but if you've noticed lately, like in the last 10 years, divergent signals very routinely fail. Now, if you can't make an assessment of when divergence is going to succeed and when it's going to fail, and it fails sometimes and succeeds other times, that's the perfect signal that you have to discard from your trading arsenal. You have to be able to make an assessment of when it's going to work and when it's not going to work. Because the only thing a software platform can do is give you an assessment of risk on entry. And if a simple divergence signal works sometimes and not others, and you get a divergence entry on your software platform, basically you're just taking a shot in the dark. Maybe it'll work and maybe it won't. And this is just a recent occurrence, I believe. I believe for many, many years, divergence was a great signal. And the reason most of you still take it is because you're still being taught to take it. And you're still being told it's a valid signal. But in the last 10 years, it is not a valid signal. And I'm going to tell you why in a second. I'm just going to skip this slide because I really want to get right to the charts. But if you sold an overbought market, it's likely to fall. If you buy an oversold market, it's likely to go up. I meant buy an overbought market. I'm sorry, if you sell an overbought market, it's likely to go down. If you buy an oversold market, it's likely to go up. These were great signals back in the day, but they just don't work anymore. Now what we know is that overbought doesn't mean that price is going to retrace. We can have a stock, a future, a Forex, any financial instrument remain overbought for days, for weeks, even months. And the reason now is that institutional money is what drives the direction of price. And as long as institutional money is still at work and still pressing a financial instrument or an index, anything to the upside, this oscillator is meaningless. And you're going to get run over multiple times if you try to trade divergence. Now, when we look at the charts, we're going to see there's still a ton of traders trying to counter trend trade, and they almost always get run over. And in fact, we count on them to be there because they help us. Because when we see them pull the market back, we're going to go in the right direction, run them over, and they're going to help us push the trade in our direction. So the meaning of an oscillator has now changed. And if you use it as a counter trend trading tool, you're really, really going to get beaten up. And let me just show you what I consider to be my rules now for trading in the kind of market that we have today. And it's going to be the kind of market that is simply what's operational today is simply going to become more powerful tomorrow as institutional and bank volume become a larger percentage of the overall volume crossed on every financial instrument, whether it be bonds, notes, crude oil, the NASDAQ, a Forex pair, or any stock. When the big money moves in, they're going to control the price. And what all traders are looking to do is trying to determine what is big money doing? What is the sentiment that's present at the time so that we can go with overall sentiment? Now, there are specific trading rules I've created in order to take into account the fact that we have to deal with institutional volume. And obviously, if we don't, we're not going to make any money. And we're sort of living in a dream world. I mean, the crude oil can make a 50-tick move to the downside on big volume. If we don't take into account this institutional volume, we're going to get run over. So number one, and this is really a truth. You are taught otherwise by many people out there, self-professed gurus and other associated whatever. There is no such thing as overbought or oversold. I mean, this is now a fallacy. To take it a step further, markets were only going to reverse at the whim of institutional money. And to put this another way, There is no mathematical formula or derivation that you can put in your workspace that is going to call a top or call a bottom. It is simply impossible. It's the kind of thing that maybe you'll be right sometimes, but you're going to be wrong a lot of the times. And if you think you're going to become a profitable trader, calling a top or calling the bottom, you're not going to be right most of the time, because the tops and the bottoms are called by one thing only, and that's institutional money. And we can never look at their computer or their switch or what they plan to do with the market. All we can do is sort of be 1/4 step behind them, but never try to get out in front of them. And if you try to get out in front of them, they're going to run you over like a Mack truck. Because just when it seems like institutional money is stepped aside, and say a stock which has been just really rocketing up is now ready to retrace, they come right back in and they push it up another 2 or 3 points. So all we can do is trade in the direction of the trend and be careful to never call a top and never call a bottom. And again, I want to emphasize that there is no mathematical equation or formula or indicator that can precisely tell you when the market has topped out or bottomed out. It just does not exist. So if you're trying to trade that way and you're being taught to trade that way, I have a spam email where I put all the junk I want. And what I put in there are other trader solicitations. I listen to a lot of other traders or other software vendors' webinars. And I see all the time how to call a top, how to call a bottom, how to counter trend trade, the best tools for calling this and calling that. And I know that all that stuff is just going to wind up sending traders off a cliff. I don't go into those webinars because I don't even care what they have to say. But I was in 3 webinars this week and I listened to some really interesting stuff. A lot of it was I don't agree with, but I'm not dogmatic. I think there's a lot of right ways to do things and there's a lot of wrong ways to do things. But one thing that is just not possible is that top or bottom. Now, the institutional money makes certain other things less valuable. And the people that proffer these things that are less valuable are going to tell you they're more valuable. But I can guarantee you, and I'm just going to appeal to your intuition, and you're going to see that they're less valuable. Certain things were predicated when they were created, just like the oscillator, on the fact that the power of every buyer was essentially equivalent to the power of every seller, i.e., there was very little institutional money around, or 400 years ago when the Japanese rice traders created Japanese candlestick patterns, there was no institutional money. And essentially all commercial traders were basically of equal power. I love Japanese candlestick patterns. I like to read them. But when institutional money walks in, they're going to destroy Japanese candlestick patterns. And I'm telling you, these patterns are shoved down your throat as you are being told that these are going to make you money, but they're not going to, because during the big money moves, they become irrelevant. An engulfing candle, a dark cloud cover, a piercing candle, a doji. All these things are looked at by very sophisticated traders and people who do analysis, but they're all retrospective evaluations. They're not on the right edge of a chart. And if you use them to try to trade options or try to make a call of a turn of a stock, they're going to very, very often mislead you. Now, the only thing that still applies, and it's one of the principles we use in the scalper, is that you still have reversion to the mean. Our mean price is the 50-period moving average. And the farther off the mean you go, when institutional money steps aside, the faster price will snap back to it. So mean price has a lot of value, but institutional money has to stand down. And what these counter trend traders are looking for is that snapback, because you can make a lot of money if you can call when institutional money steps aside, because if you're 3 standard deviations above the mean, that mean price is going to pull price down hard and fast. You just can't do it. So if you trade divergence, you're trading against the flow of institutional money, and we can only trade in that direction. So to skip a whole bunch of slides, the only oscillator that is not meant to track divergence is the Laguerre. It has a default gamma. It has multiple smoothing filters. We've modified the whole thing, and all we use it to do is track the direction of momentum. We want to look at price acceleration to the downside or to the upside. The Laguerre will give you divergent signals, rarely, but we don't care about them. We're only looking to trade in the direction of price acceleration to the downside or price acceleration to the upside. And that's what we use the Laguerre to track. Now, I'm just going to give you a few quick examples. And I want to give you one more principle that I use to trade that I think if you adopt is just going to help you. It's a principle that I learned back in 1999. I read a book by the name of Alexander Elder, who I used to be really good friends with, and I've lost touch with him. He sent me a signed copy of his book. It's called Trading for a Living. And I think he wrote it in 1997. And what he was the first person to codify the triple screen method. And what he wrote in his book was that no indicator that assimilates data from the trading chart alone is going to have the power to tell you how price is going to move out into the future when you're on the right edge of a chart. And it doesn't. No indicator leads price if it's just looking at price at the trading chart. And when I read that in 1999, it made a lot of sense to me. And Alexander Elder became a multimillionaire on that principle. He used a triple screen method, no matter what indicator he used. And he used standard indicators because this was real, this was 25 years ago or 20 years ago when there wasn't sophisticated, charting platforms. But he had to get an indicator alignment on 3 time frames. That had the predictive power he needed to be able to call a trade and call a direction. And he became rich trading very primitive indicators on very primitive charting tools simply by doing a multi-time frame assessment of everything he used in order to determine how price is going to move off the right edge. And that's what we do with the Laguerre. Now we look for price acceleration to the upside that continues to accelerate to the upside. And let me give you an example. Like right here is the Laguerre on our trading chart. We still need to look at the direction of momentum on our chart. It's one of the rare indicators where we actually look at what's happening on our chart. But we have to look at a multi-time frame assessment. or this is not going to have the predictive power we need. When there's no multi-time frame assessment or multi-time frame alignment of momentum, either to the upside or the downside, as defined by this green line or this red line, price is always going to chop, because price is neither consistently accelerating to the upside or accelerating to the downside. As soon as price begins to accelerate to the upside and gets stuck at the 100 line, and this is telling you on the two higher time frames, the 9-minute and 27-minute, this is a 3-minute, and I purposely took out the instrument because it doesn't matter what it is. It can be any financial instrument. If this gets plastered to the 100 line, only institutional money can do that. And only institutional money can keep it plastered to the 100 line. Now, there's a lot of traders out there looking for divergence. We're not looking for divergence. We're looking for the chart momentum, this arrow, to start accelerating to the upside into the direction of the multi-time frame assessment. And price is going to accelerate on our trading chart to the upside. When price starts to accelerate to the downside, we get the down arrow and we're out. And I'm really showing you these slides more to show you what happens when you don't have a multi-time frame alignment of momentum as a marker of acceleration of price to the upside or the downside. And you really wind up in a chop market. I can show you hundreds of examples of this. I'm going to show you on a live chart. Here, momentum on the two higher time frames, the 9 and 27-minute, plastered to the 100 line, or it's above the 80 line. It's between the 80 and 100 line. As soon as momentum on our trading chart moves into the direction of the long-term assessment, you've got your buy signal. And price is going to accelerate up. This is a force we leverage in this scalping program. And I'm not going to go into any more examples. I just want you to understand that. I want you to understand what you're looking at. And I'm going to take this down. And I'm going to put up one other deck, one other slide. I want to go over that one also very, very quickly. Because we always trade, what's very, very important to also do is trade in the direction of order flow. The problem is that very, very few software packages do appropriate assessment. I'm going to show you why. Hang on one sec. Because I was thinking of doing this without slides at all, but I think it's really going to be disadvantageous to try to show you what we're looking for if I don't show you some slides. And you can see I'm trying to move through them too quickly. I hope it's not too fast. And I just want to talk quickly about the market delta. I mean, there's all kinds of very sophisticated ways of analyzing volume now. There's market profile, which I always disliked. Even though we created a really sophisticated market profile, we kind of gave in to public pressure. But I never understood how market profile worked or why it should work. And you'll notice that you really don't hear about anybody telling you, we've got the best market profile now, and you don't hear about Stottlemyre anymore. That's because it was a fad. It came and it went. And I never liked it to begin with, even though we traded with it. I never understood why I should trade with it. It was something I did really because everybody had one, and it was silly. But we got rid of it really quickly. We don't use it anymore, thank God. But a sophisticated volume analytical tool is important to use. But just like market profile, market delta, which is an important number, has to be done right. And it's done right very rarely. Now, it's not that sophisticated a number. It simply looks at all the traders sitting on the bid and all the traders sitting on the ask, totals them up for every tick value, cent value, or pip value, and creates a number. This is 29.85. It's a little blurry, but it should represent that because there are more traders looking to buy, that there's buying pressure on this candle and price is going to rise. And if only it was that simple, we would all be rich and we wouldn't be trading. Now, inside here, this square is stack sellers. This square is stack buyers. If you try to chase that, you are going to go right off a cliff. It does not have the predictive power you need to trade profitably. It'll work for you sometimes, and it will fail for you a lot of times. Now, the problem with market delta is that a positive delta can occur with a down candle. Now, if you get a down candle, what are you going to do? I mean, if you use this to determine how price is going to move off the right edge of a chart, you're stopped out. If your stop is a reversal candle, which I recommend it should be, but I'm not going into automatic trade management strategies right now. And you can even see at the bottom, the stack sellers right here does help you push this candle down. And the reason a positive delta can be associated with a down candle is because what you have here are aggressive sellers. If, for instance, price is 100, all the buyers are looking to buy at 100.1. So all the sellers should be looking to sell at 99.9. But there may be sellers looking to sell at 99.8 and 99.7 or even 99.6. They're so certain the market is going to go down that they're very aggressively placing their orders, and they mean business, and they're going to get filled. So they're going to drive this candle down, even though there are more buyers sitting on the dome looking to buy. That creates a very, very difficult problem for using a market delta derivation and an internal stack buyer or stack seller derivation to try to determine how price is going to move off the right edge. So what we've done is this, and this is just a whole series of candles with their market delta values. And this is a chart, and this is what you see very commonly, of the magnitude in change in delta. And you can see when it's rising, you would expect price to rise. And then when it takes a jag down, you might expect price to fall. But it's very inaccurate, because right in the middle here on this positive 222, you have a down candle, even though the slope is rising. So we just fall back to the old Alexander Elder triple screen method to create an accurate way of assessing market delta. And by doing so, what we essentially do is we only take one standard deviation's worth of data and throw out all the outliers, because you're only going to see aggressive buyers and aggressive sellers rarely. One standard deviation's worth of data is going to close in the appropriate direction. Positive delta associated with an up candle, negative delta associated with a down candle. Let's get rid of the outliers. Just trade the one standard deviation's worth of data and only look at the higher time frames. Let's trade a triple screen method. So what we do is we look at 3 time frames, the trading chart and the 2 higher time frames. Now I trade a Unorenko chart, but it doesn't matter what you trade. And we take the delta values of each candle, put them into a 15 period smooth, simple moving average that smooths out all the data. So the number that you see is the average of the prior 15 deltas. So that rare delta where you get a big green number on a down candle or a big red number on an up candle is minimized by the fact that it's smoothed over 15 derivations. And when both 15-period SMAs are sloping up, you've got the bulls in control when the price is going to rise. When both 15-period SMAs are sloping down, bears are in control and price is going to fall. And when the SMAs are not in agreement, it's going to be yellow. And you get a yellow line, don't trade. And this is just some quick examples. Then we're going to go to a chart. When order flow is aligned to the upside, price is going to rise. And remember, this is not looking at price on your trading chart. It's looking only at the delta values of the two higher time frames and creating that 15-period SMA slope, which is up on the two higher time frames. That's why price is rising. That's another thing you see on 99% of the software. When price rises, their stuff goes green. In our case, our stuff goes green and tells you that price is going to rise. You're never going to take a counter trend trade. I will show you that. Now, if you want to try to call a top, which I told you I don't recommend, you'll have to wait till order flow changes. But you should never take a counter trend trade. There's another example. Now, order flow leads price, and I'll show you that on a live chart. It's going to go green, and price is still going to fall a little bit, and then zap to the upside. Now, this is giving you an absolute direction to trade, which I'm telling you is 80%. See this trader in this counter trend candle? You get these all the time in these moves, which we'll see off a live chart. This trader's calling the top. Order flow is green. Why would they do that? Well, they're trading oscillator divergence, MACD divergence, Japanese candlestick patterns. The other thing that's neutered to death by institutional money is Gann theory and Elliott wave. Elliott wave and Gann theory hypothesize that there's an intrinsic waveform inherent in every single market as a closed system. But then when you batter it with institutional money, that intrinsic waveform is gone. So that's what they're trading, because they're certainly not trading the system they should be trading, which in one form or another is tracking the flow of big money. And when big money is not around, this is an important theory, but I'm telling you it's right. Every closed system, it's a law of thermodynamics, and the market is just like any other closed system. Without the application of energy in a closed system in physics or big money in the markets, they chop. So unless order flow gives you an alignment to trade, and you try to trade without the application of big money, you're going to trade a lot of chop, and you're going to get stopped out a lot. And I'll just tell you this one more thing. The goal we have as swing traders and day traders is not to get winners. I could put my son in front of this computer. He's 18 years old. He's graduating from high school next Tuesday. And if I handed him this mouse in 20 minutes, I could teach him how to get winners. What he cannot do is avoid losers. And that's the goal of a professional trader. It is not to get all the winners. It is to avoid the vast majority of losers. And when I say the vast majority, I mean almost every loser. That's what's going to create huge profitability for you. Here's no alignment, and you get chop. And this is where you don't trade. So I'm going to come off the slides. And now we're going to go to the chart. Let me just find out where the slide was. Hang on a second here. I'll be able to find it when I need to. Here it is. Okay, I'm good. Now, there's one other thing that I want that the system has that I need you to understand. This blue line is a measure. It's called on the chart. It's called fractal energy. But really what it is a measure of volatility. Now, what happens to volatility in a trending market? In a trending market, volatility drops. In a choppy market, volatility rises. So this blue line always gives us an idea of, based on volatility, whether we're in a trending market or whether we're in a chopping market. And it's really very, very good. Now, there's a couple of other things that I need to talk to you about. Remember, we always do a triple screen assessment. We never take a trade off of our trading chart alone, because if we do, we're going to wind up getting stopped out. This pink background tells us that we have a multi-time frame alignment of the NASDAQ to the downside. Now, there are three separate down colors. There's pink, there's bisque, and then there's light pink. If you come aboard, I will teach you what each of these colors represent. This is the weakest down color, but there's an alignment. This is the moderate down color, but there's an alignment. Here is your bread and butter alignment. It is super powerful. Your higher time frames have got the 50 red and down, the 15's red and down, prices below both and pushing down hard. So this background is pink because of price action and market structure on the higher time frames. And this is the most profitable time to trade. It's just the same with up. You'll notice almost every time you get green, price rises. It's not because rising price turns this green. It's because the higher time frames are aligned to the upside very powerfully. And price on our trading chart is almost always going to rise. I mean, you can see this is giving you a tremendous edge. Here's our weakest up, and here's our intermediate up. Again, I will teach you what all these are if you like the system. It's just too much data to go into now. The third are the pivots. And I know it's getting to be a little bit, but I want you to understand the system. And very few traders trade like this. And that's why very few traders make money. And I'm going to show you how much money we made in May. And I think you're going to be really shocked. So I'm going to show you my Win Ninja Trader back end. Now, the pivots on most systems are done wrong because they're done the easy way. The pivot is taken off the candle, off the wick high. And if you know that wicks in Japanese candlestick dogma have no meaning, they're just nonsense. A pivot is created by a candle body high. And these pivots are killer pivots. And they work for us in two ways. And this is how we're going to trade them and leverage them. Number one, when price comes up to a pivot, we're never going to trade into it because we already know there's a ton of sellers in this pivot. When price retraces, it comes back up. Again, it's pushed back. It doesn't matter what's below us. We never traded into an unbroken pivot. In addition, most other pivot indicators will tell you a pivot is broken incorrectly. Based on Japanese candlestick dogma, a pivot is broken only when 2/3 of a candle body closes above it. That's what snaps the pivot. But it's really easy to code when you simply get one tick above the pivot and you say, okay, the pivot's gone. Well, it's not gone. All those sellers are still there. So what happens on this candle if you enter one tick above the close? You stop out all the sellers in this pivot, and this trade snaps up to give you a terrific winner. And if you'll notice right here on this entry, you've got both leg gears accelerating to the upside on our chart on a multi-time frame basis. We've got volatility line dropping that shows us we're in a trending market. And there was something I forgot to mention. Oh, order flow is we assess it without a line. We simply put it on the candle halo. Order flow is aligned to the upside when the candle body is blue. It's aligned to the downside when the candle body is magenta. Now I want to show you order flow. If you want the line, you can have the line. It's right here. I have it transparent. If you want to make it, you can make it any color you like and put it in anything you want, and you'll have the momentum line. I don't want it. All I want is to visualize the candle halo color. And I have simply elected to make my outline down color magenta and my outline up color blue. You can make it any color you like. And just to show you really quickly, it's going to screw up the chart for a second. But if you want to put this, if you want to make it any color you like, I'll leave it at 15. And you want to put it into panel 2. It's it's sitting in the same, but you can see that thinner line. There's your order flow line, but it's all reflected in the price candles. So why I have to rescale this to 2, this to 3, this to 4, this to 5. Not going to bother. You can see that you can have the order flow line there, but it doesn't give you any additional data. So why clutter your chart with it? So I'm just going to go back to making it. I'm going to go back to making it transparent and put it back into the same as the data series. And I have a nice clean chart. So the reason I call this the scalper is, what I'm going to do is, now the NASDAQ's a brutal instrument to trade. It's got a huge amount of volatility, but if you leverage it appropriately, you can make a ton of money. And let me show you my control panel. Here's my control panel. I can't fake this. Now here's the account performance. Now I'm taking it from the 6th. I had surgery at the beginning of the end of April. Now here's our performance. We made $5,785 in the month of May. I'm going to show you the trades. Most of the trades were just 2 contracts. We go to currency, and if you'll notice, a huge number of them We're 100, 100, 100, 100, 100, 100, 1, 1, 1, 100, 100, 100, 100. Now, I picked up a couple of losers, and believe me, a lot of these were just crappy trades I took. It wasn't that the software misled me. This was the toughest I took for the week, right here, for the month. But 100, 100, 100, 100, 100, 100. And what I'm doing is all I'm looking for is 10 ticks on 2 contracts with a very tiny stop. 2.5 points on the NASDAQ is super easy to get if you take the trades at the right time. And you can get 10, 15 of these in a day. And you can, now we're going to have a webinar. I'm going to teach you all the ins and outs. Right here is a pullback. And what does that pullback represent? It represents a lot of sellers trying to turn the candle. And the sellers, I call this a bear failure, because they create this long wick and they can't turn it. You look below, you have price acceleration to the upside on 3 time frames. And look what's happening to volatility. It's plummeting off this high. You're in. We're only looking for 10 ticks or 2.5 points. This trade goes for 10 points. Now you can go for bigger targets, but we're just looking for smaller winners. Now right here, you really want to have dual greens. So I'm only going to show you the dual green. You want to trade when the background bias is red or green. And so you're only going to take the most conservative trades. Right here. There's your pullback. And up you go. Now, here's what's great about this trade. This is the pivot breaker. You're carrying with you all the sellers. Volatility is dropping. Prices are accelerating to the upside on the higher time frames. You have a multi-time frame alignment, order flow to the upside. For you to get 10 ticks on this move is cake. Now, if you wanted to add a 3rd contract and try to pull a runner out of this, there's no problem. But if you just want to go 2.5 points, bag 100, and take a 10 tick stop, you're going to get 80+% of these, maybe even more, because you're just cherry picking the best. And if you trade the whole day, you're going to get a ton of these. Now there's no background here. I got to rescale it. This is NinjaTrader does crazy things with fractal analysis. See right here? Look at this pivot breaker right here. Whoops, wrong one. Right here. Everything is with you on the trade. Now volatility is sort of flat, but you'll take this trade. And down you go. This trade, here's the pivot breaker. If volatility is flat, you're okay. As long as it's not rising into the trade, you're all right. And down you go. And that's really the truth. If I see flat, I'm all right. If I see rising, I will not take the trade. And there's another winner. Now I have to keep rescaling it because you see NinjaTrader cannot handle a multi-time frame analysis of background. Here's another winner. right here. Here's your pullback. Now, I could do this all week, I swear to you, and you're just going to get winner after winner after winner. It's just a stellar way. I mean, if you're looking for $300 or $400 a day and you get 3 or 4 of these trades, they're going to work for you. And you're going to take very little risk. Now, right here is a tough trade because you've got fractal, you've got volatility really kind of rising. So I'd be a little bit concerned about that trade. You really want everything with you. Now, here's, again, volatility is really not perfect. Here's your great trade, right here. It's not, it's a weaker down, but you've got your wick. You've got momentum accelerating to the downside. I love it when this volatility is falling like a rock. Price is accelerating to the downside. Now you've got the pivot. So you've got to make a choice. Are you going to take all your contracts out at the pivot, or are you going to let it roll? But the fact of the matter is, at the pivot, you've almost got a winner. If you're in here, this is your entry candle. If you scale it right here, the distance to the pivot is 10 ticks. So you're already out of the trade, and you don't have to worry about it again. Now I'm going to show you a couple of other things that let me show you a trade I took today. And I never chase a trade. You know, if something doesn't align, just don't chase it. I made $425 today. I took an opening trade that was so bad, it gave me a cramp in my stomach, and it cost me a big winner on crude oil. But we're just looking at scalping the NQ, and I'll show you a great trade that I had, if I can find it. Couldn't have gone anywhere. It's got to be right here. Where'd it go? It was right here. I entered this trade. I think right here. Now, unfortunately, you're going to get wicks in real time. You don't get them here. It was a little bit riskier. I got a first target. Then I got another pullback, internal wick, and I went down and I went short again. I went short twice. Oh, I went short here on this pullback. And I got 2 winners on this trade. So now the other thing that I have to tell you is every one of these indicators is fractal except for the Laguerre. This line, background bias, when you close and open Ninja, they're going to be slightly different. Nothing will ever repaint. Nothing's ever going to change. But Ninja Trader, we have arguments with Ninja over whose fault it is. It's their coding. So because I've closed and reopened, you're not getting a perfect view of the colors we were trading live, except right here off the right edge. And you see how we're getting wicks off the right edge? You're going to see those internal wicks. So if you're just looking for 10 ticks on an extremely volatile market on 2 contracts, you're risking 100 to make 100 in a market that's going to give you, I'm telling you, 80 to 90% winners. The vast majority of my trades this month on a $5,700 85 month, in which I missed a huge chunk of the first half of the month because of my surgery. I mean, we could have pressed much closer to 6,500 or maybe even $7 grand if we had every trading day. And remember, Monday we missed because it was Memorial Day. So this is a huge amount of money, and it's not a fake, because here is every trade. Just like that. And if we look at the summary, 80% of my trades are winners. Now, if you could trade with 80% profitability, and the majority of them are scalpers, you're gonna. I mean, if I'm not sure that that you might even consider a 10-tick trade a scalp. On the NASDAQ, I do, and I just want to drive home one other thing, because it's very important. On every entry, we're always looking to run someone over. And let me give you a good example of that. And like I said, if you come aboard, I'm going to show you all the nuance. But if you look right here, let's take this out, and let's take this out. Now, right here, what makes this trade so great is we get these two traders going long. I don't know what happened to this box. Now, they are doomed. And I also want to show you the forward-looking ability of order flow. This up candle is on down order flow, and it foreshadows the collapse in price. We're going to go short right here. Whoops. And here, I'm ready to get two winners. So this is going to be a $200 move. If you're looking for 300 a day, you've already gotten 200 right there. We run these traders over. God only knows, you know why they're going long? Again, Elliott wave, Gann theory, Japanese candlestick patterns, MACD divergence. They're calling a bottom. And they're saying we're going to go back all the way up. We know that's unlikely. And when we get the down candle and it closes, we're in one tick below. And we've got a perfect short trade right here. So we try to do that on every trade. They don't always set up exactly the way we want them, because we need both lines red. It's very important to have locked gears on every trade. So you have to be patient. But I'm telling you, in a trading day, you'll get 10 to 15 of these that are going to work, that are going to set up for you perfectly, and you're going to get them. And a lot of these big moves, you can get in 2 or 3 times. You're not looking for a big move. Now, let me see if there are any questions. I'll just show you the offer for the system. It's really a very complex system, because it's all doing an analysis from multiple time frames. It's not a one time frame thing. And I don't think that anything that bases its entries or performance on one time frame will ever get you there. Now, here's our offer. If I can find it. It's our NASDAQ Scalper. It's normally $2,000. We're going to sell it for $9,797. That's the lifetime license. You get free upgrades. Now, we're working on indicators now that I believe is going to make it better. You will never pay another dime. If we get better indicators that help you get better entries, you get them for free. It's the full software suite. It's everything I've showed you. You get a ton of training videos. We install the whole thing for you. Now, it works on NinjaTrader 7 and NinjaTrader 8. You want to use it on the NQ. It's really, the whole thing is the speed of the gears, the speed of the background, the higher time frames are all configured for an NQ4 Unirenko. Now, If you're wed to time, or you're wed to tick, or you're wed to range, I ask you to use a 4-unit Renko on this chart because it's going to make you a ton of money. And what you should be wed to is making money, not wed to a time frame or a type of bar or type of chart. If you're treading water, if you're getting stopped out, if you're having trouble, I'm telling you, this is going to come to an end. I mean, I showed you my performance this month. If you get comfortable with the system and you want to take your 2 off at 10, bring your stop to break even, we can do that for you. Then you got a runner at no cost, or well, at no risk. And if it just so happens the trade goes 6 points, you've got yourself not just a scalp, you've got yourself a monster winner. And you're going to get stopped out so rarely, it's worth it. So the first 5 will come into the live trading room with me and trade it with me. And the offer expires Sunday at midnight, which June 2nd. Our number 786-732-4656. I'll leave that up and let me answer any questions that you might have. And even if you don't come aboard, I hope you got information. I try to make these educational, not just a big sales deal, because I want you to become better traders. And I want you to understand my perception of market movement and what's required on your software to get you where you want to be, which is making money. Okay, hang on. Hey, William. No problem, Terrence. Okay, we got there. Okay, David, now I've spent some $20,000 on my trading education. The RL system and room are helping me produce a win rate now over 82% consistently. All a person needs to do is to take only most conservative trade entries, all lower lines the same color, background bias in the gear locked in the same direction, and you will make money like you never have before. Perfect example today, 6 contracts taken on 2 trades, 100% winners. David is a great guy, and he's wasted 20 grand on paying for junk. And I'm so happy, David, we've got you where you want to be. You know what my stomach is like in the trading room. I mean, it's really important to me to make money, and you're a better trader than I am. And we have a lot of traders in the room who are better than me, and you're one of them. Congrats on that. Yeah, we got the NASDAQ, called it. I just did. And I kind of couched it in trading secrets because, number one, very few traders understand that counter trend trading is going to blow you away. Very few traders understand that you need a multi-time frame alignment and trend in order to take a low risk trade. Very few traders understand what it requires in order to get you where you want to be, because you're taught so much junk. And I get all that junk in my spam email. And I have solicitations now for software where I can go in there, and for $47, I'll be able to call tops and bottoms. There's software for $15,000 that'll tell me where the NASDAQ will top out in 6 weeks. It's junk, because between now and 6 weeks, who knows what's going to happen? We could be at war with Iran. There's no way you can call a top or a bottom that far in advance. Just stay with this software or software that does a multi-time frame assessment, only trend trades, and only trades when institutional money is present. Only trade when the gears are locked, because only institutional money can press them down like this. And price will move up and down without the gears. Like right here. You only get one, not the long term. And the long term gear You can go a long time without turning a color. Hard to find it, but it can just disappear. Hang on a second. Well, it's pretty much almost always gone. It's the right setting on the NQ right now. I mean, look at this move on the pivot breaker here. I didn't even show this trade. Look at fractal energy falling like a stone. The pivot breaker. You stop out all the sellers. Now, you can probably get into this trade 2 or 3 times and take it up on 10 tick intervals and make 100, 100, 100. Or go in with a runner and take it all the way up until you get a reversal candle and you're out. But those are the most conservative trades. I'll show you today, Randy. Right here. Today was a very difficult day to trade. And I'll show you the trades I took on the NQ. Now remember, you have to remember something, truthfully, that the background color moves to the right. Everything moves to the right. And I'll show you the trades I took. Right off the dome. You're not going to see this happen many places. Here's the 31st. Here's our trades right here. I'm going to show you a horrible trade I took. It's really a bad trade. I took it at the time was 9:31. 9:30. I took it right here. It was a terrible trade. I tried to go long here. It was awful. But I'm just going to show you you can make mistakes. The second trade that I took was at 9:39. Right here. And that is a gorgeous trade. And then I was out. I went back in and got another winner right here. I made 275 on the runner and scalped 100. And the rest of the trading were 3 scalp trades on the NQ. One at 10:09, right here. Exactly what we're looking for. It's a weaker background, but there's the trade. Dually gears, falling volatility, 10 ticks, 100. Here. Next trade, 10:21. Right here. Perfect trade. Another 100. You see that down candle? I love when I trade off a down candle. Caught all these traders in the wrong direction. And I've got perfect up. Order flow, haloed in blue, dually gears, falling fractal energy or volatility, blows right through. And there's another 100. And then my last one was at 10:49. Right here. I took the pivot breaker. I got in late. And all I made was 100. I was just looking for a scalp. And look how far that went. That was a huge trade. I missed the better entry right here. But I still chased it. And this one went all the way. Those are my trades, right off the dome. 100, 100, 100, and 270. That was an 8-point move. I could have made, if I had a runner on that trade, I could have made a lot more money. And I wound up with 425 right here for the day. And on the summary, 425. I had 6 trades, 5 winners, and 1 loser. 83.33%. I mean, you can't be more transparent and open than that. Thank you. Thank you so much. I just did. Has this been tested at both high? Okay. Are you changing your NQ chart to this one? No, Russ. No, we're not changing anything, Russ. We're not. You can change parameters, Billy. This is really meant to be a scalping type of setup. If you want to try to catch a swing trade, Billy, we'll have to reformat it for you, and you're going to have to give us the time because we're going to have to change the speed of the background. Remember, it's predicated on a 4-unit Renko. So the higher time frames are 6 and 8 Renko. We're looking at the long-term Laguerre off a 13 range and an 8 range. We'd have to change all of that, but this is a time frame independent system, and ultimately doesn't matter. I like it best on the NQ, just looking for 100, 100, 100. You get them repeatedly. But if you want to swing it, you can. Yes, Gary, you just call us and we'll take care of that. Called up, it doesn't work on MT4. But here's the thing. You can set up NinjaTrader on a demo that costs you no money with a demo data feed and take your entries on MT4. I mean, right now it's the best we can do. It's such a complex system that it's really hard to move to another platform. We're in the process of moving into Sierra and it's taking forever. But right now, that's the only thing that you could do. You could see the entry, place it on Sierra, and still get it. It's a little more cumbersome, but you're just looking at one chart, which is giving you all the data off of 3 charts. On the Unirenko, Joe, the reversal, it's a 10-4-20. Okay? That's our standard Unirenko size for the NASDAQ. Offsets 4 ticks, Ernest. You know what, Robert? I'm not. I think it works great for the quick 10-tick trades, and that's really where I'm going to stay with it. 7 or 8 or both, Nico, works on both. This is configured only for the NASDAQ. And the reason it is because of its amazing volatility. I mean, you're not going to, scalping the E-mini is really, really tough, in my opinion. And scalping crude, I think, is sort of kamikaze. Because crude will blow you out of a trade so quickly. I mean, here's the thing, because a lot of people in the trading room, they don't like to sit around and be bored, and sometimes you don't get a trade. So you're like, put up another instrument, Let's trade a third instrument. But I'm not going to do that because our only goal is to make money. If this chart and this system, if you put in a runner and it makes you 300 or 400 on one trade, or you just trade 2, and 80 to 85% of your trades are winners, and your risk to reward is equal, you don't need anything else. That's the thing. Don't run to complexity. Master it, and I'm telling you, it's going to make you money. Yes, called it. Yep, David says counter trend trading. he will spend your hard-earned money faster than his ex-wife would. David, not faster than my ex-wife. Or we'll have a competition. The 130, Joe, that's a much more complex system. And that's not for scalping, Joe. This is just really set up as a scalping system. And the fractal energy works great on a scalper. And if you want to upgrade or you want to, we'll give you this as an offset. So there's no way you can make a bad decision. My pleasure, Randy. Thank you, William. No, if you're scalping, Jason, I'm only going to use 10 ticks. That's why if you're only looking for 10, you're only going to take a 10. And I have watched the NASDAQ move. And if you take a pivot breaker or if you take a candle off a reversal candle, it's going to fire up at you. It's not going to drop a wick to stop you out. And I am tightening my stop in general. My pleasure, Tom. And yes, we'll be sending out a video. No, Russ, don't do anything until you tell me. Don't change anything. You can call up. Just call us. 1-to-1, Hector. You're risking exactly the same amount of money as you're taking as a reward. In fact, if you put in a runner and you take 2 off at 10 and you're at break even, you've only risked 10 ticks. You've now made back your money. You have no risk, and you have the chance to get an 8, 9, 10, a 15-point move. So at minimum, your risk is 1-to-1. And so many, I mean, if you've got all this alignment, the NASDAQ kind of spits out 2.5 points. It's just not asking for a lot. And it does it consistently. As long as price is accelerating up on multiple time frames, as long as you have a multi-time frame alignment to the long side, as long as order flow is giving you buying pressure in the market and you have all these aligned, or you've got a reversal candle and you take a continuation, and I'll show you all that, you got a super good chance of getting 2.5. And the 2.5 usually get like stat. I mean, quick. You are in and out. And then your goal, if you don't have a runner, is to look for a pullback and get right back in and try to get another 2.5. On a long move, you can do that twice, at least. That's it. Take what works. You can always modify later. Thank you so much, Jerry. I am trading crude, Jim. I trade crude to the NASDAQ in the room, but but crude is no scalp trade. Sure it can, Tim. Absolutely. James, I would use and trade this like anything else, only when there's good volume. And if you look in the lower left-hand corner, lower right-hand corner right here, we have our volume indicator. It's the only correct volume indicator I've ever seen. What it's telling you right now is how many contracts are crossing per minute on the NASDAQ. Every minute, every 60 seconds, it goes back to 0. Now, right now, it's crossing good volume. And you see here, you've got a great trade here, except it was right into support and it broke it. Here you do not have either Laguerre. And the market's a little lacking. I would be cautious. All you need to trade is good volume. You want at least 400 to 500 contracts on the NQ. and I'd like to see him really roll. When we were trading this morning, we were trading 1,000 contracts to 1,500 contracts a minute, and the NQ was just blowing through everything. And if it wasn't for the fact I took a real stinkerino trade, and let me tell you, I take stinkerinos once in a while. This cost me a lot of money. And we would have been out with 600 if I didn't take this stinker. So I came right back though, 5 winners in a row. Sure, Joe, we're gonna send out an email with the link. No, Jason, for the scalper, just a 10 tick stop. That's all. Okay? That's it. If you're just looking for 10, only take a 10 tick stop. And I'm going to tighten my stop. That's it. We want a 1-to-1 risk to reward. A 2.5 point stop is enough. That's because, Calvin, I'm not trying. Some of the trades I take on the NQ are not scalping trades. Some of them I scalp and some of them I don't. If I'm looking to try to get 4, 5, 6, or 7 points, I take a bigger stop. If you're just going to purely scalp, you're going to get a 1-to-1. And that's a very good observation. And that's the answer. We're really close, Jim. Sergio's going to just about have it done by the end of the day. And that's a new indicator we're going to throw out. If you own this system, you're going to get it. I'm not going to go into it, but it is a killer indicator. It's never been done before. And he's going to try to work on it over the weekend, so we'll have it on Monday. It is a brutal. I'll show it to you really quickly because I'm so proud of it. If you give me 30 seconds, I'll show you the indicator. Hang on 1 second. It's just something that I've observed. See, and it's not really a scalping indicator, but if you own this system, we'll give it to you. We'll give it to you as an upgrade. And here's what happens in a standard market. And then here's the market. So let's say this is volume crossing per 10 seconds. So volume is crossing at some, well, I have the wrong thing here. It's a really complex indicator, and he's working really hard on it. So let's say volume is crossing, oh geez, let me make this thicker. Make it green. So let's say volume is crossing 500 contracts per minute. And there's the volume line. Then all of a sudden, the institutional traders come in, and volume goes like that. That's volume per 10 seconds. Now, what happens to price? Now, on this volume, this is good volume. Price can do anything. Go up, go down, go up, go down. I mean, and it may be in chop. We don't know. But when volume skyrockets and the institutions move in, now this doesn't give you a direction. If price is below the 50 and the 15, we're looking for a price to fire down. If price is above the 50 or the 15, we're looking for price to fire up. But here's what consistently happens. Price will stay flat and then fire up. So what you have is about a 10 to 15 second window to get your order in on this massive jump in volume, because it's telling you contracts for 10 seconds before price skyrockets. You're going to get an audible alert. It's going to scream like you stepped on my cat's tail. And you've got about 10 seconds here where price will lag behind this skyrocketing volume. And it's the first ever made. Now this line is more complex and the toughest one to make. This one is contracts per 10 seconds times delta price. So if this goes up 4 ticks, this line is going to go up 4 times more acutely than volume. So I really traced it out wrong. What's really going to happen is that the line is going to look more like this. It's going to go like that. It's going to be a much steeper slope than the volume. Because whatever the volume is, if you multiply it times delta price and it goes up 3 ticks, it's going to be 3 times the value, and it's going to skyrocket above that. That's the new indicator. It's almost done, and it'll be an add-on. No, same price for upgrade, Tim. Same price. Abraham, I try to take 3 to 4 a day, and I'll be perfectly honest with you. I had a very rough day yesterday, and I took my biggest drawdown for the month. And I don't want you to think that that this what you walk on water no matter what you do. And I was just down $700, and I traded all the way back and wound up making 100. But in order to do it, I had to take 15 trades, and I only took 120 trade or 100 some odd trades the whole month. So an enormous percentage of the trades I took in the whole month I took yesterday. But I brought us back all the way from a big negative to a positive day. So on the average day, we're going to take 3 to 5 trades. If we trade well, that's all you're going to need. Our profit target per day is $300 to $500. Per week, we're looking to make 1,000 after contracts, after commissions. Per month, 4,000 after commissions on a very tiny portfolio. I mean, I got guys in the room that are trading 8 and 10 contracts who make 3 or 4 grand a day. But I don't want to trade that many. I want to keep it small so everybody in the room can follow me. Jason, that's when I had my stop set way back. I'm going to bring that stop up really tight. Thank you, Tom. We'll send out the video. You have a wonderful weekend. My pleasure, Abraham. Thank you so much, Called Up. Look, you know what humbles me? The freaking market. I mean, you can never stand on your laurels, because if you beat it up one day and you think that you got it licked, it'll come back. Look at this trade. We couldn't have taken it. We don't have the dual of gears, but it's down it goes. The market will come back and beat you up the following day. So that, I'm telling you, it's the great leveler. And if you approach the market every day like it's a dark and angry prowler looking to really take your money from you, it's a much better attitude that to think that you than to be arrogant and to think that you got a leg up on it. You can, Olindo. We can set that up for you, Olindo. We can. Yep. Starting Monday, we are never using it again. And Olindo, yes, we can set it up for you on the Qs. And if I had time, I would show you the Qs. They trade exactly the same. Exactly the same. You just have to decide what you consider a scalp. But you can definitely scalp the Qs. Only you're gonna have to trade a lot of, you're gonna need 1,000 contracts to make what you can off of a leveraged instrument. You're just trading stock, but you most certainly can. You just tell us how you want to configure it. Sergio will do the complete configuration for you. I'm a tech dummy, and I cannot configure my own software. He'll do everything for you. So listen, have a wonderful weekend. I'm gonna make June a killer month because we just had, I consider, a triple, not a single or a double month, a triple month. Let's see. I want to make June a home run month. I'm not out for surgery. I've got the whole month. I'm only taking one. I only have my son's graduation on June 4th, where I'll not be trading. So we have almost every trading day, and let's try to make at least 4, maybe 5 or 6. Monique, my pleasure. Have a great, great weekend. And I pray that you all make money, and I wish you the best of health. Take care, everyone, and have a great